Great. I'd like to start with you, Steve. Why don't you tell us? Actually, why don't we go through and why don't you let each of you tell you a little bit about who you are and why you came to decide that this was a good idea to work on. Let's start with let's start at this end with the other end with Michael. Because I met Michael, at the Atlantic Council. We were both speaking at a conference, and what he had to say at that conference really, made me perk up my ears, and I'll let him tell you a little bit about that.
All right. Well, thanks, Rod. I'll try to summarize that. My voice is a bit affected. I hope you still can understand me. So at that time, I spoke about some of my thoughts about carbon pricing. I've worked on carbon pricing for 10, 12 years. And I'm not an economist, I'm a lawyer. I'm always, of course, surrounded by economists declaring that it's, the optimal instrument to deal with externalities such as, say, greenhouse gas emissions. In my practical work, though, I keep seeing jurisdictions pushing and pushing and pushing to introduce it. And it's just such a political battle. And so there's a few theoretical arguments that I narrated, for instance. You have politically agreed targets, when you have physical constraints, say, for instance, certain concentrations of greenhouse gases in the atmosphere you don't want to exceed, et cetera. Welfare maximization, optimizing sort of the welfare effects of a policy is probably not the way to look at it. You have hard constraints, so you need hard policy objectives and policies that guarantee getting to those objectives. Economists may still say that if you define the objectives, carbon pricing is still the most cost-effective way to do that. But again, having worked in practice, having advised governments, and having seen time and again just what a battle it is to uphold a tax policy election cycle after election cycle, I realize we don't have time to fight for what may be sort of, in theory, the optimal. We have to think about other policies. And Rod described at that conference the clean tax cuts concept, and also started getting me persuaded about the theoretical aspects of it, which do make it very attractive. So that's how I came to the topic. I'm probably the only sort of carbon pricing guy with a carbon pricing history here, but glad to hear I'm not alone. And yet really fascinated by this.
Michael, plenty of carbon pricers in this crowd, believe me.
Okay, good. I'm relieved. I was worried that. I'll hand over to.
Hi, everyone. I'll try to be very quick here. Since we're running late. As Rod said, I don't remember how I got involved, and I can't believe it's already 3 years ago, but when Rod first kind of brought the idea to me, the one thing I thought that was innovative about it, and it's taken me a long time to realize it, is it's categorizing the whole...
Can you tell us your name?
Oh, I'm sorry. Thank you. Wayne Weingarten with Pacific Research Institute. We're a free market think tank out in California. San Francisco and LA.
And let me just say that I'm extremely pleased to have the Pacific Research Institute associated with us in any way. And that's because the man who founded it was Sir Anthony Fisher, who was a friend of my family's and a mentor for me. None of you know who Sir Anthony was, but he was an RAF pilot who was a successful entrepreneur. And he became the Johnny Appleseed of free market think tanks worldwide. He set up the Manhattan Institute here in New York, IEA, which was the brain trust behind the Thatcher administration in England, Pioneer Institute, Fraser Institute, something called the Atlas Economic Research Institute, which carried on his work and has set up something or helped found something like 300 different free market institutes around the world. So this PRI is plugged into all of that, and so it's very great to have them along to, if we want to socialize ideas like this among conservative think tanks, having partners like PRI is a wonderful partner to have. So anyway, sorry for the.
I didn't pay him to say that.
No.
Very quickly, the thing I thought that's kind of brilliant about the whole concept that Rod came up with is that we're asking a very different question. As opposed to asking the question, how do we punish the externality? How do we use a negative incentive to get emissions down? We're asking the question, how can we get a positive incentive to get the innovation that kind of bypasses that problem? And that's a very interesting way, not just for kind of the emissions issue, but a lot of issues of externalities that economists deal with. I think it's a very interesting way of phrasing the question, and it's a very kind of pro-growth way of looking at it. We're not talking about how do we punish, but how do we kind of incent the positive. And I think that's one of the most important kind of contributions that the concept brings. We can talk more about that after introductions.
Mm-hmm.
Okay. I'm Steve Nadell. I'm with the American Council for an Energy Efficient Economy. We're a nonprofit research organization based in Washington, D.C. And for the last 40 years, we've been working on technologies, programs, and policies to help improve energy efficiency in the U.S. And at this point, we've collectively, not just us, improved the energy efficiency of the U.S. economy by about 50%, but there's a lot more that can be done. We got involved with clean tax cuts with the first charrette. We're always looking for new creative ideas on how to make policy changes, and in particular, we believe very strongly in bipartisanship because it's pretty rare that you have one party with such control that they can do whatever they want. But therefore, you need some cooperation, and particularly if you want some staying power, because the political pendulum goes back and forth, you really need bipartisanship. So we were very interested in this, and as I'll say in a few minutes, been working hard on it.
I would also add that, Steve is one of the wonderful people that has been brought to this project by Amory Lovins at the Rocky Mountain Institute, along with Travis. It's surprising how when you engage in the charrette process that Amory had suggested was completely unknown to me, but it does bring in people who, have ideas far better than your own to the table, which is one of the key things about it. But anyway, go ahead, Doug.
My name is Doug Woodring from an NGO called Ocean Recovery Alliance. I'm from the Republic of California, but I live in Hong Kong. And Rob approached me at Trammell's event, EarthX and Earth Day, and said, we have one sector missing in our clean tax cut regime of sectors that we want to approach. And we want to do something with the ocean. And I said, well, that kind of scares me that you would be incentivizing more exploitation in the ocean with tax cuts. And I said, well, one thing that is really needed is the protection of the ocean with the plastic and the waste issues. And as soon as I thought about it, I thought this is the holy grail tool for the world, not just the US, but for the world to fix the incredibly lacking capacity of waste and recycling infrastructure around the planet that is now very evident with China's ban on plastic and recycling imports that are not processed. And countries like the US have zero capacity to handle that new ban. And so I think this is probably going to be the champion topic that can drive all of your goals for the movement of this bill, because plastic is probably one of the top issues in the world today and one of the most complicated. And I think it's great that we're here talking about this tool that can be one of the sectors of the 8 on renewable energy and clean tax cut space. Thank you.
Great. So, let's go to Wayne, I guess, first. And, Wayne, you're the economist here, so I hope you're going to, help us outline a couple of these things. I've already outlined the clean asset bond. Are you familiar with the clean innovation tax cut, and can you describe that for the folks?
When you say clean innovation tax, which one?
The one on the first 5 power plants?
No.
Oh, you don't know that? Okay. Oh, dang. Okay.
I
I thought you were up on that one.
No, I can talk through the clean tax credit.
Okay, well, go ahead. Go for it.
I guess the general is everyone familiar with the clean tax? So when we talk, we keep using that term. Is everyone familiar with what we're talking about? The idea, and actually, I'm finishing an editorial looking at it as opposed to CAFE standards, right? What we talk about, trying to raise the average fuel economy standard for automobiles. Imagine instead of doing that, we actually looked at it from a clean tax cut perspective, right? So that we would have some threshold fuel economy standard, say 30, 35 miles per gallon. And at that average fuel economy and lower, you're going to pay 21% corporate income taxes. But if you can get to 36, maybe you're paying, 20%. If you can get to 54, maybe you're paying 10%. Now all of a sudden there's a profitable kind of incentive for a company to get to a 54 mile per hour average fuel economy. And when you're doing that, that between 21% and 10%, you're going to end up with about, I think, a 17% increase in your profitability. So that's, from a kind of a corporate perspective, from a corporate perspective, that's a huge increase. That's a game changer if you can talk about 17% after-tax increase in profits from increasing your fuel economy standards. So, and that's, I think, in essence, what we're talking about when we're talking about on the equity side. Rod spent a lot of time talking about the debt side. From the equity side, how do we incent a company to want to increase the in this case, the fuel economy standards? How do we get them to want to reduce emissions, do all those things we're trying to get done? In this case, we're taking a huge profitable incentive and having that be kind of a carrot to encourage activity as opposed to a stick of a mandate or of a tax.
Mm-hmm. Right. Perhaps, Doug, next, could you talk a little bit about how the clean tax cuts would apply to the plastic space, that, with the ideas that we've discussed and, what they look like?
Right. So I think following on your comment, if you look at the situation with plastic pollution and waste, a lot of the sticks are a ban or a tax on material or type. But you've got such variety across the board and such users of this product in the families of the product. You're rarely going to get a legislative change that is strong enough to make a health and environmental difference that will move the dial. But if you put the carrot in, which is this incentive on the tax side, whether it's through equity or debt, you have a much better chance of leveraging the potential for entrepreneurs and corporates and governments, state or local, if they're incentivized as such, to be able to put in the infrastructure needed to recover this pretty complicated material stream, which is our waste outputs. It's not a sexy topic. It might be sexy now, but what I mean about that is it's not getting the glamour that Silicon Valley or others might have invested in with wind power and solar and other types of renewable energy. The waste sector is sort of the last thing on the totem pole, and not a lot of the effort has been put into driving the investment into these areas, which are sometimes not so complicated, but they require money and they require localized machinery. So you can't just put one big machine or one giant wind farm in a location and expect to gobble up everyone's waste outputs. But you can multiply a bunch of machines that are each $1 million and put them into 1,000 municipalities and fix the problem. And that kind of tax incentive and equity incentive through these programs is very much what's needed. And if it's not the US who's going to be the first to be leading on this, it can easily be a myriad of other countries who realize that they have all of the deficits in this space and lacking the recycling and waste infrastructure. And for them to come and say, we need entrepreneurs, we need innovators, we realize this, we're going to drop our taxes in this sector to 10% or zero. I think this is going to absolutely change the dialogue. And it's so much better than what we've been talking about today, which is a straw ban and a bag ban and a tax on some candy wrappers. And so, I think that, congratulations to Rod and everyone for putting this together, but I think it's a really a new beginning in this area.
The Clean Free Market Act includes, the financing of waste recycling facilities, for financing by the Clean Asset Bond, which will drive down the cost of those and increase financing. And if this, because the act is plug and play and can be implemented by any state or nation, it has the potential to draw in international financing to these kinds of projects, which go well beyond waste recycling into clean energy and other things too. But, One of the things that we did not include in this is clean product tax cuts such as Wayne described, because it appears to us that those would be more complicated in the sense that they'd have to be more bespoke solutions for each industry and maybe bespoke solutions for each country. And the SDG, the Sustainable Development Goals that they particularly have might be targeted in different ways, and some countries might like more tax revenue coming in, and they might not agree. So including that in the act wasn't there, but more work needs to be done on the clean product tax cuts for plastic. And that's an area where we would definitely be looking for ideas and new partners to help us figure that out, folks that have the ability to do the quantitative work on telling us how to economically model that, how to price it, how to figure out the environmental impacts for that. So I throw that out there for people to think about.
Just to add on to that, one example of the product side is the use of recycled content. So if you are incentivizing the use of recycled content back into products, and that can be triggered by this, then you have a very big potential angle, because you cannot have recycling if you do not have buyers for material and products. Mm-hmm. And without that, you can't have a clean car if people aren't going to drive it. But if you can recycle as much as you want, but if there's no incentive for governments or companies to bring that back into their product stream, and cross-border tax benefits in this line would be very beneficial.
Yes, very important for making that recycling waste stream more valuable. And encouraging more recycling to have the end products from that be taxed at a lower rate, and the income from that be taxed at a lower rate, could help spur that whole sector on. And we also talked about, more complicated ideas like applying this to EPR and product stewardship systems and bringing down the cost of those and increasing the rewards. But for the sake of, by the way, we just mentioned one other, for the folks' sake of the donors here, you could mention your partner in the UK who wants to write the first academic articles on this, and maybe hook them up with Michael. Tell us a little bit more about your partner there, Doug, because you're more familiar with him than I am.
Well, this is new, but living in Hong Kong, I am trying to help to broaden the international scope of this. And if one of the people we work with is an academic from the UK, Peter Jones, and he's offered to help, but he's quite connected in the I would say the environmental community, who's been around a long time in the government in the UK.
Is he an economist, or what?
He's an economist, and I think some of you maybe can help us collaborate on this. But the more that we can get this into the discussion at the G7 and the G20, and different larger communities where they also may have the ability to move quickly, because in this case, this one topic, but I would like to believe that if it happens to be plastic and waste that is the driver of the momentum, that the other sectors ride on the coattails of that, or vice versa. Right. It doesn't matter. The point is we got to put them all together and get on that road together. Yeah.
Steve, I want to move over to you now and ask a little bit about, I know that some of our partners at CRES and some of the other members of the Clean Capitalist Coalition are very excited about taking the Clean Free Market Act and some of the clean tax cut ideas to the state level. And as you heard, Andy thinks that we should be focusing there. Your focus is being more federal. And I'm wondering if you can comment on that state versus federal, focus on rolling this out, and where you think the potential is most, or at least the focus is for you, and what you think we need to do in the next year in terms of work on development of the clean tax cut concept, modeling it, economic impact. What's the work that needs to go forward, and what work does ACCEE want to play in this next year on this?
Okay, first to back up a little, we got involved with the first charrette. We did a lot of work on commercial real estate and equity side tax cuts. If you had an Energy Star or a LEED building, could you pay a lower rate? And there are lots of other ideas, you know, whether it's the oil and gas industry, whether it's carbon capture and storage. And as I was thinking about this could be an 800-page bill, and trying to get Congress to focus on it is going to be challenging. Can we come up with some overriding concepts? And so hence we picked up on the clean asset bond. You can use a clean asset bond, meaning allow tax-free or low-tax bonds, and cover a variety of different listed uses. So I have a background in energy, so we started with energy, whether it's renewable energy or other emissions-free energy, fossil fuels with carbon capture and storage, nuclear, energy efficiency, a number of provisions there. We added in recycling. We also added in using best available emissions control technologies for oil and gas production, because the idea is to try to appeal to people who have many different interests, somewhat of a clean end of the all of the above type strategy. So what we've been doing is we packaged it into an outline, and we're now trying to find some champions on Capitol Hill, particularly starting with Republicans, because we don't want this to be tainted as yet another Democratic idea to promote clean things. We want to make sure we have the Republicans before we start trying to branch out. We're based in Washington, so that makes, and we've worked with Congress for 20 plus years, so they know us very well. Fortunately, they actually call us more often than we call them, which is always nice. So that's one of the reasons we started at the federal level. Also, the average federal tax is a lot higher than the average state tax. So if you are trying to provide incentive, you know, dramatically oversimplify, the average federal tax rate is probably in the low 20-some-odd%. The average state tax rate, you know, I mean, yes, New York's a little higher, I understand, but for most of them, it's, you know, 5-ish% maybe. There's some states without any. So yes, we can do something. New York actually, because it has a high tax rate, might be a good place to think about it. I know we have a governor who's up for re-election, but if he gets re-elected, he'll be looking for new ideas in his new term. That could be useful. But in the meantime, because so much of this is a national market, we're also working on federal. We do think there will be interest in new policy solutions next year. While no one knows who's going to win which districts and whatnot, I think it's a pretty safe prediction to say it's going to be very narrow control of Congress, either House or Senate. I don't know which party will be on top, but nobody's going to have a big margin, and therefore we see an opportunity to try to get people, can't you work together before you start slugging each other in preparation for the 2020 election? So we're hoping that we can maybe get some things there. In terms of what we want to do, we do want to get our champions, get a bill introduced, and ideally get it acted on for a series of, you know, clean asset bond for about 8 different areas as a 6-year pilot. But then we can try to build, whether it's plastics or other things, onto that. Rod mentioned analysis. We've done some analysis on the costs and impacts, but I'd love to work with an economist who knows how to model these things much better than I do in order to really more fairly estimate the costs and benefits, because the markets are complicated. A lot is already happening, so you start providing a clean tax cut. Some people are already doing it anyway, so you have a cost without any additional benefits. How much additional benefit, and how do you structure it so you can maximize the benefits while keeping the cost to a level that Congress or a state legislature is willing to spend?
Steve, what do you think about the idea of pulling together a charrette or working group of not just ACEEE, but some outside folks to look at the question of modeling the, including maybe MIT, CBER, Wayne, and some other folks, to look at the question of modeling the budget impact, the economic impact, and the environmental impact, so we really get a more solid picture of what that will look like?
I think it would be great to do that. I look forward, even here in some of the sideline discussions, whether it's MIT or others, starting to explore how we might put together a team, call it a working group. Do we need a full charrette or just a working group? I'm not sure yet. But yes, it's going to be a group effort.
Yeah, okay, great. I want to mention that there are a couple of ideas that have been floated, and maybe after we talk to Michael, there will be an opportunity for some folks to make proposals from the floor about working on clean tax cut that they might want to do. And I know that, a couple of areas have been floated. There needs to be an innovation component to this. And one potential area is to allow green banks to vet ideas, that might go beyond the list that's just included in the Act, because green banks are expert organizations that know about sustainable investing and lending, and they are specifically chartered to do that. So to allow them to loan to more innovative projects, and then those projects become certified by that action of the green bank, and then are able to issue, the debt becomes tax exempt that they issue, and the loans and maybe securitization of those loans that become bonds would allow for a source of innovation at the state level led by green banks. So we need a study of that. We also, there's another idea, the clean innovation tax cuts that I mentioned, or the idea is that the first 5 projects of any energy source are extremely difficult to fund. There's a big valley of death there because of the reluctance of VCs to jump into them. But you can shorten that valley of death if you can change the risk-reward ratio. And one of the ways to change the risk-reward ratio might be to make those projects completely tax exempt for the first 10 to 15 years. No business income tax, no capital gains tax. This is actually based on an idea that Professor Bose mentioned at the Columbia Shred on Green Bonds. It wasn't a green bond idea, but he said you need an innovation component here. And the idea is that by doing that, you actually change the risk-reward ratio. You make the reward much higher. And so the valley of death shortens because it's easier to finance these projects. So that idea has been lying fallow, waiting for somebody to pick up. We need a group to look at that, and we potentially have some, but if anybody wants to, take a look at that who's here today, that would be a great area to look at. But going from there and turning to, and there are a bunch of other things that need to be looked at too, but going from there, Michael, I'd like you to talk a little bit about the papers that are underway that you're overseeing, and to talk about what future papers need to be written and that you would like to find scholars to write about to develop this clean tax cut idea more robustly at the scholarly level.
Sure, Rod. So, as you've mentioned, we've started trying to raise funding to support some academic work on several questions. I think there's no real question why one wants to have robust academic analysis of a policy proposal, but I secretly think that partly you want it so you don't have to explain the concept the whole way every time you introduce it to policymakers. So a number of topics that we've sort of circulated, exchanged ideas about that we think would merit analysis. We've talked a lot about economics and how important the discipline of economics would be to understand better the strengths, potential weaknesses, relative to other instruments in a policy mix, et cetera. Clean tax cuts in its various in various manifestations could have. So one thing, of course, is to compare the performance of clean tax cuts to other instruments, carbon pricing, as you're working on, or investment tax credit, production tax credit, subsidies for innovation, et cetera. So there's, I think, a rich area of application and analysis right there. Another one is, as you've mentioned as well, modeling. So doing macroeconomic modeling or CGE modeling, or if you indeed want to have the environmental impact, earth systems modeling, that's a heavy lift, and you need really heavy hitters to do that kind of modeling. So, but hopefully we'll generate enough interest, show that there's political momentum, and maybe also get the necessary support to get groups that have such models to apply them. I think realistically that, even if we find the clean tax cuts is an absolute winner, we hope that we will find it as a real enrichment of the policy mix, it'll probably join other instruments. There's just so many instruments already out there, so it'll have to sort of interact in a good way with other existing instruments. It'll be part of a policy mix. And so understanding those interactions and where such interactions could be complicated or counterproductive, where they synergize is another area, I think, of important research that economists and others could participate. I'm a lawyer, as I mentioned earlier, and so I have a particular sensitivity to the legal and institutional aspects. I think there's a lot of questions that need to be addressed, things like legislative powers on matters, fiscal matters, on revenue spending, et cetera, that are very relevant, especially when you not only look at the federal level, but look at federal-state interactions, international cooperation, where it's really hard to get cooperation on tax issues, or there's at least fewer examples, and it's really important to look at those areas of precedent. But heck, we're open to other ideas. I think a philosopher might come and say, this has moral and ethical implications. Let's look at the normative dimension, or other disciplines, social sciences, et cetera. So I'd say we should really be open to what are the questions that we may not even have thought about yet. And as I mentioned before, we've got some initial kickoff funding to do 2 papers. And I think, Wayne, you might talk some more about the one that you're writing on after this.
Yes.
And I'm working on a paper trying to look precisely at the question of, if we want to go beyond sort of the federal level, which is, for many reasons, as Steve explained, an important and good starting point. But if we do want to look at, say, the subnational level, if we do want to look beyond national boundaries to international cooperation, what kind of examples do we have? What are sort of the models that have worked in the past? Somebody mentioned, I think it was you, Rod, before, free trade agreements, cooperation on tariff reductions for environmental goods. There has been some progress on that, so what can we learn from that? You mentioned carbon markets. There has been cooperation on carbon trading based on reciprocity at the international and the subnational level. What can we learn from that? And there's some, if albeit limited, cooperation on tax issues reciprocally, for instance, double taxation agreements. Again, what have been the processes that resulted in something such as the OECD model, double taxation agreement, that we could learn for and leverage for the clean tax cut idea?
Well, great. Thank you, Michael, for that overview. And I hope some folks are inspired to, who are at that level of scholarship are able to jump in and help us on those papers. But Wayne, please talk about your paper.
We have a few calls for questions for the
We will, in just a second. But I do want to give Wayne a chance to talk about what he's working on. And, Wayne, Michael mentioned combining the carbon tax with other policies. And you mentioned yesterday what I think is your favorite other policy to combine it with. And, I think there's a good paper there and more work that needs to be done in that area. Would you talk a little bit about the paper you're writing now and what what policy combinations and what other papers you would like to see written?
Absolutely. I'll be brief, I promise. The big question, because we really, from an academic perspective, trying to understand how does this actually work differently than the common mechanisms, most common one being carbon pricing, carbon taxes. So we're really, on an evaluation, how does a carbon tax impact pricing? How does it impact emissions? How is it going to impact the economy? Right? What are the differences there? Then looking at clean tax cuts in both a debt financing perspective as well as the manifestation in equity side. How do those work? How do those impact incentives? What's the expected impact on emissions, as well as what's the expected impact on the economic impact? Because you would expect, where carbon tax, right, anytime you impose a tax, you're going to have a deadweight loss associated with it. There's going to be an economic cost. When you deal with a tax reduction, you're not going to have the economic cost. What you are going to have is a revenue impact, right? Now, of course,
you might actually have a GDP gain.
You will have a GDP gain which will partially offset. I don't think we should assume that it'll be 100% offset. And that's kind of the combination. If you look at what types of revenue spending that the government does that actually harms the environment, and you see if you have those green spending cuts, I think that's kind of an optimal kind of policy where you're actually paying for the reduction in the tax rates with reduction in spending. If that spending harms the environment, you're getting a balanced budget approach that's actually kind of doubly benefit for the environment. So we're kind of looking at those evaluations, seeing how they compare from a kind of a theoretical perspective, from an economic perspective, from a financial perspective. And in a nutshell, that's where we're going. What we'd like to do is then bring in kind of the combination. How does the investment tax credit fit into this? The production tax credit, and then the differentiation between the marginal tax rate reductions and tax credits, given the stage of financing of the innovation. I think that's a very important next topic that we need to start evaluating, because in an innovation and incubator stage, you can have different issues than if you're a mature company.
What about the green scissors spending?
Right, that's the policy combination, right? That revenues to pay for the tax cut, you want to cut spending. My biggest one, ethanol, right? Which is bad for food, bad for corn prices, bad for the environment. Why are we spending money beyond the politics of it? Mm-hmm. Those types of programs highlighting that.
Right. Well, at this point, I'd like to, if there's anyone who'd like to, make any proposals for things that they might want to engage in or work on, now would be the time. This is our lightning round. Is there anyone who'd like to, suggest anything that they'd like to talk about and lead on this in this area of policy development?
Hi, I'll survey the room and come around and pass you the mic, and then after which time we'll have a coffee break and begin for the next panel. We'll have 2 questions.
Well, we may have more than that.
Okay. All right.
Thank you, Helly. Jeff Poten from Columbia University. I'm a reformed federal regulator, and Rod, I've been working with you on the Clean Tax Cut Initiative for the past year. And it certainly will inspire innovation and entrepreneurship, but I don't see how you get away from the need for a regulatory mechanism. You still have to have some government entity that verifies that indeed the entrepreneur or the private sector entity is performing according to the criteria that would give them access to a tax cut. So I wonder if the speakers can talk a bit about how they would see integrating such a mechanism. I kind of shudder at the thought that the IRS is going to make a judgment on fleet efficiency.
Would anybody like to fill that?
I can start. What we're trying to do to start is to have good definitions in the law so that you can know this is a pass or fail in terms of being eligible for, does it meet the EPA, best available control technology? Does it capture, it's carbon capture and storage that captures at least 60%? Is it emissions free? And if it is, then yes, it would be eligible. Yes, you'd have to do some spot checking to make sure people are abusing it. But the idea is to start with things that are relatively easy to define, relatively easy. Yes, then you can get into much more. We've avoided for now the ones that are, lots of gray area, because we want to get started somewhere.
Mm-hmm. Great. Anyone else have any thoughts they'd like to share?
Yes, Richard Haase with the Clear Value Companies. I would like to talk about, you brought up innovation a lot, and my company's all about that. The 5 companies are all about innovation. And I can honestly tell you, the financial markets are truly broken there. I mean, the offers we've gotten are all takeover attempts where I had to just say no, all right?
Yeah.
There needs to be some real change there because the valley of death is very deep and very wide. And America is losing its competitive edge. I mean, it's happening in China, it's happening in Europe, it's even happening in South America. We're killing ourselves. We are. So I would like to suggest that maybe rather than a policy person, who's probably very good at law, all right? Mm-hmm. And maybe rather than, and I was an adjunct professor while I was fighting a patent, so I understand the universities, okay? Take my hat off to y'all that can handle it, because I had to go, okay? Maybe have some innovators, some entrepreneurs assist with that legislation because they know what's going on out there, maybe an investment banker or a policy person. Is that something that can be done? Maybe bring the people in that are trying to get it done and are seeing this. I mean, we're talking about huge development projects to hide the engineering simply because there's no way you're getting anything done anymore. Thank you.
Yeah. let me just say that, the charrette working group process whereby this is being developed has brought in many people who are entrepreneurs to the table, and capitalists, green bond folks and financiers, Andy Sabin, for instance. Travis Bradford himself is now the chairman of Watt Fuel Cell, I believe. So he's wears academic and entrepreneurial hats. So, I would imagine that this innovative policy work that we're talking about will involve actual market participants at every stage, not just professors. So.
I work with a lot of professors. I compliment the work they do. I really, really do. What I'm saying is whether it be a professor or, say, somebody in policy in Washington, the people you just talked about, the people you just talked about.
Right. Any other thoughts? No. Yes. Yeah.
So, and the last question before we break for coffee, just wondering, as we've socialized the idea of clean tax cuts in Washington, are we seeing any uptake from interest in a bipartisan way? As I think I've heard of a number of Republicans being interested, but I'm just curious if it's been something that we're seeing a lot of support from Democrats on is it across the aisle that we're seeing support?
I can answer that. We have talked to a number of Democrats, and I think there is interest. We are perhaps more concerned to make sure that Republicans lead. We don't want the Democrats to get out ahead, but I do believe from some conversations that, yes, a number of Democrats would be happy to jump on board once there is, it's clear it's truly bipartisan.
Yes. Is there anyone else who'd like to, make any suggestions? Yes.
I can talk some loudly. How about the idea of pilot cities? Rob Steer, I'm one of the startups in the waste management space, Frontline Waste. Biggest problem with getting financing is finding the cities who are innovative, willing to take on some of these new ideas and new innovations from America. If we create the pilot cities that get the tax incentives and get the ability to create new ideas, there are great leaders who are city mayors who would probably step and say, we want our city to be that innovative head in this country, in this state. If we can think of it from a pilot city perspective, then the entrepreneurs will flock to that city and will create new opportunities.
Well, I think that you have a point about the ambition, but the problem is that the cities don't have a lot of say on any other taxes other than the taxes in that city. So it's a very, in terms of the potential market that you're reaching, it's small, and the taxes are not usually very high. So it would have to be, the Clean Free Market Act wouldn't necessarily be implementable by a city, but we'd have to figure out a new framework for cities.
However you want to go about bringing that regional perspective, but something has to be done where we have a place to go to bring our new ideas. It's too hard otherwise.
Any thoughts, Steve, about how you'd approach a city on this?
Right. I am aware of a couple of projects where there's been competitions between cities. There was a Smart City Challenge that ultimately Columbus, Ohio won. I think they got $100 million, as well as lots of in-kind assistance. The MacArthur Foundation ran one. Typically someone has come up with money and then the cities compete for that. I guess you could try to do it where the incentive is you get some type of reduction in federal taxes for the winner. I don't know if anybody's done it, but hey, we could think creatively. Yeah.
Yes.
One of the motivations behind the clean tax, or one of the sort of inspirations for clean tax credits applied to clean investment bonds is was municipal bonds, right? So municipal bonds themselves are a way that exist that have federal tax exemption for projects that are deemed to be in the public interest that are sponsored by cities.
Yes.
So is it possible, I know you've done some work on this, and I'd love to hear what's the current state of play here, but is it possible instead of doing instead of trying to create a new federal tax exemption mechanism to then, to house this, is it possible to try to adapt the existing municipal bonding authority, using cities to sort of put up their hand and say, yes, we think this is collectively in the public interest, and we'd like to use our existing tax-exempt bonding authority to do this as a way perhaps to incubate the development of this inside this program that already exists?
Well, that's an interesting question to look at, but I would say, though, that the municipal bond market is a terrible place to put a new incentive. Even though the municipal bond market is a good, example of using tax exemption for the public benefit, which justifies the entire concept. If you look at the muni bond market, it's thin, illiquid. You're losing a lot of the value of that to the illiquidity risk premium and the lack of transparency, the fact that the broker-dealers are, often, political cronies who are charging hidden fees, and, you've got, they won't give you a market quote. You only get what they're selling it at, but it's like going to a fishmonger. Their price, but not the market price for the fish. It's really an inefficient market, and it's not well designed. So maybe you could do something, but the bang for the buck is putting this incentive in the corporate market, I think. I think that the bang for the buck for the municipalities is to take the look at what we're doing and say, why are we structuring our municipal market like this? We should structure our municipal market like the corporate market. There should not be border barriers for tax exemption for these municipal bonds. We should have these reciprocal agreements between states where, our tax exemption is, the thing they could do is to lobby to have, these green bonds for cities that follow the clean asset bond model that delivers a guaranteed impact. Those bonds are tax exempt to the citizens of every state, right? That would be a powerful mechanism if you could lead on something like that, I would think. But that's a whole new area of avenue of policy research for clean tax cuts, which is pushing into a very innovative area that people may not be ready for. But that's my thoughts, Travis. But if you think I'm wrong and there's more there, you're welcome to jump back into the policy.
Look, so we tried this with
development
REITs, and we've tried this with some other federal policies,
Right.
where if we could just kind of get a few words changed in the existing laws, you actually could then increase the number or types of assets in there to encompass what we would largely consider, whenever we finally define what they are, clean assets. So sometimes it's just easier, rather than starting from a blank mandate of a new policy structure. I mean, look, maybe the municipal bond market needs clean assets more than clean assets needs municipal bonds, right? We need to fix that mechanism. We can fix that mechanism by making sure that whatever changes need to be made to allow these assets to be put in them would suddenly make that a much bigger market. But there's an existing set of folks at the policy level and in the financial community who like this mechanism and would love to see the nominal asset value within their market go up by 1 or 2 orders of magnitude. So I'm just trying to tap into other folks who might share an interest in trying to change policy and trying to lower the policy lift by working with existing mechanisms rather than a brand new mechanism. That's the intuition. It as you point out, it requires further research and for us to figure out whether there's any real opportunity for advancement there.
Well, listen, let's talk about that over the coffee break. I think it's time to go to break, and we'll come back with a new panel shortly. Absolutely.
Thank you very much, everyone. We have some coffee and snacks back there. Thank you to our panelists, Michael Weingarten, Steve Nadell, Doug Woodring, and Rod Richardson.